They're both down on disappointing data, David, but the Kiwi looks kind of to be the real kind of source of pain here.
Yeah, definitely, there's no two ways about it. They both had disappointing data, as you allude to, but for the Kiwi, the business confidence really did outweigh the Aussie private capital expenditure data. And the reason being, Royal Bank of New Zealand Governor Orr said even just last week, he indicated that they are prepared to cut rates if need be. Didn't say they would, but if need be. And one of the criteria he looked at was falling business confidence, feeding into falling output, and feeding into human psyche. So we've had this negative trend for nearly a year now in business confidence. Today it made a 10-year fresh low. So when you combine all it together, now the market's thinking, will we start to stir expectations of a rate cut? Not a rate hike, but a rate cut. It may not be imminent, but if this trend continues, there'll be more and more pressure, you think, on the RBNZ governor or to cut, particularly if inflation doesn't pick up.
We had the RBA meeting on Tuesday. I've got the RBA page up here on my terminal. You can just type in RBA Go to get that with a lot of data accompanying it. What is the data that's going to affect its outlook?
Well, certainly today's data wasn't positive for the RBA. We'll obviously be disappointed about the animal spirits that it's often referred to in terms of private capex. Now, on the positive side, even though the 3 months through June did disappoint, the actual next 12 months were actually higher than expected. So I think RBA can take a positive from that. I think going forward, there also has obviously strong employment, which would really like to feed through into strong wage growth. I think that's the key thing for it really going forward that we'll look for. And the other factor I think we're looking for it to monitor or actually focus on maybe is yesterday Westpac had the raise in mortgage rates. Now it's the only bank to do it so far. Others may follow or not, time will tell. But certainly obviously that could have an impact on consumer demand and consumer sentiment. And again, if that starts a downturn, that'll obviously have an impact on the economy. And therefore I think it will be interesting to see how dovish or hawkish does the RBA treat that Westpac hike yesterday more than actually the private capex data today. One way or another, though, it's certainly been obviously weighing on the Aussie near term.
David, how much of this is about China?
I think China's definitely about question and impact. It won't go away. While there's deals potentially for Brexit, and you're looking at NAFTA's potentially trade deal, President Trump, it seems, wants to play a bit more hardball with China. And he said, hey, negotiations are on hold at the moment. Obviously, there's an additional $200 billion of tariffs looming in the background. Now, with Aussie and Kiwi, that's the very export-orientated countries or export-import-orientated countries, and certainly with regards to China. Aussie in particular, by far its biggest export economy is China. So if China was to have a downturn, it would definitely impact the Aussie. So I think, therefore, with that, until that trade talk is actually resolved in a positive way, Aussie's going to be under pressure. And obviously, if the tariffs are imposed, an additional $200 billion, then that would certainly expect to weigh on the Aussie dollar, at least in the near term.